Hey everybody, Mo here. Today we're continuing our discussion on the Trulieve SEC filing, a new report from Headset on the Arizona market, a little bit of news on state commission meetings, and maybe a couple of other things. Welcome to the Wednesday, October 20th edition of Mary Jane Markets. This is a show covering the developing news of the North American cannabis sector every Monday, Wednesday, and Friday. I also analyze a few of its operators, Cresco Labs, CURLF, Green Thumb Industries, and Trulieve. The goal here is to do all of the due diligence I normally do as an investor in these companies and then provide that to you in a concise episode so you can stay updated. As usual, let's take a quick look at the market before we jump into things. And yeah, that's pretty hot. Alright, I won't bury the lead here. After the last episode, I received another email from Trulieve's Director of Investor Relations, Christine Hersey. This was unprompted, so it continues on with the thread from the last episode. If you're a new listener, I do recommend that you go watch that. It will put this entire discussion into context. But the TLDW of it is Trulieve made a filing with the SEC on October 13th, stating that they made a debt offering of $66 million on September 30th that was unrelated to an acquisition. And we also knew that the Harvest acquisition closed on October 1st, and concurrently there was a $350 million debt raise. So seeing that series of events, this filing caught my eye, and we examined and deduced and speculated about what this could be. And well, as Christine says in the email I mentioned, mystery solved. She goes on to say in this email, the SEC filing for the $66 million in debt was required and is for the portion of the $350 million in debt that was sold to U.S. investors. So it is not additional debt. It is a carve out of the $350 million debt that was announced. So there you have it. This is not a separate raise. Full stop. Now, those of you who have been following along really closely the last few episodes might still be a little confused since there seems to be information that conflicts. I sent Christine a reply asking a couple of questions. First, if this is a carve-out, should we expect to see further Form D filings when the remaining $284 million is issued? And asking for some clarification on the duration question. Item 8 on the Form D, duration of offering. Does the issuer intend this offering to last more than 1 year? Is checked no. But the October 6th 8K says that the $350 million notes come due October 6th, 2026. So this information seems to conflict, and I'll read off of the screen here because the specifics are important and I don't want to get tripped up on this. I'm aware that the terms of the transaction allow for optional redemption at redemption prices, either after 2 years or prior to the 2 years in the form of a concurrent equity issuance, which is why I wanted to follow up on this. So my thought process at the time was, if they pay back this carve out before 2 years, they have to do so with the proceeds from issuing equity. Obviously that dilutes shareholders, which is why I really wanted to get to the bottom of this. However, Christine goes on to educate me, only the US sales required the SEC Form D filing. So that's the $66 million carve out. The rest of it, the $284 million I asked her about, we won't see further filings on because those were sales outside of the US. She goes on to say, the reason why the form is checked for less than 1 year, that is the duration of the offering, not the duration of the notes. So this is an egg on my face. Item 8 there was referring to the act of actually issuing that debt. It isn't the duration of the debt itself. And I agree with Christine, it does get confusing with the dual listing, especially when you consider that in Canada, there is a filing on SEDAR for the full $350 million. So I still think this is on me for not properly understanding the filing and then speculating a little too much. I'm sorry about that. I hope you can see though how confusing it was trying to get to the bottom of it. I think we did the right thing by doing the due diligence and investigating there. We were asking all of the right questions. And I want to give a huge thank you to Christine and Trulieve's IR team for providing us with those answers and helping all of us understand this. The way that that email came in, it seems like she or somebody else at Trulieve saw that last episode, and if you're watching this one, you definitely have the gratitude of all of the retail investors here. On a programming note, on these longer form investigations that may span over multiple episodes, please let me know if you prefer the current format where we kind of investigated it together, or if you want me to just sort of bring it up briefly on the show as something I found and I'm looking into, and then present it to you at the end after everything has been made clear. So let me know in the comments about that. Personally, I'm leaning towards the former. I think it took us down an interesting path of due diligence and I got to talk about and explain a lot of different things. But let me know what you think. Your feedback definitely influences the show. Alright, switching over to some broader market discussion. There is this Headset report which came out on October 12th on the Arizona market, which I thought was interesting. The reason for writing the report, between January and September 2021, Arizona saw $1.6 billion in total cannabis sales, including both medical and adult use sales. putting their year-over-year growth rate for September at 110%. And this puts them only behind California in terms of total sales, leapfrogging every other state in the last 9 months to get there. Even more impressive when you consider that Arizona went recreational only this year. And to put this into context and make this accomplishment even more impressive, Arizona is the 17th largest market in the nation, with my estimation being that it is a $2.6 billion market, remarkably smaller than some of the other states in the top rankings. Colorado slightly larger at $2.7 billion. Michigan should be a $3.8 billion market. And Illinois, which is the 5th largest market in the nation, should be a $6.4 billion market. Those are, of course, my estimation of potential numbers, and that includes legal and illicit sales. As you can see here, the actual legal numbers coming from the states during 2020 vary as those markets develop. So this rapid growth is amazing and curious. What's going on here? Has Arizona figured out something that other states haven't? $1.6 billion means they've converted 61% of their illicit market to legal. I should preface the following discussion by saying that I don't think the primary driver behind designing Arizona's state program was to convert the illicit market to the legal market. As shareholders, that's certainly what we want to happen. That goes a long way in getting us to realize our TAM, our total addressable market. But I doubt it's even on the minds of politicians when they consider what the state program is going to look like. That goes for every state, not just Arizona. I'll let you take a guess as to what I think is the primary motivator behind legislation. Anyway, let's turn our attention to the data Headset is reporting, as well as another factor they don't report on, but I think is crucial to figure out why Arizona's program is seeing such amazing results. First up, and I think this is the least important and least insightful out of the three, year-over-year growth. Headset is reporting here that Arizona's year-over-year growth in sales every month, that's the dark blue line here, has been between 80 and 170%, settling in here at around 110% for September. Meanwhile, other states like Illinois and Michigan, while they've seen growth, it hasn't been as large, and as you can see here from the slopes, it's been slowing. All of that is factual, but I say this is the least insightful because it's not an apples-to-apples comparison. While all three had a medicinal program up and running prior to recreationalizing, Michigan did so 2 years ago, Illinois 1 year ago, and Arizona just this year. And as a side note, I can't overemphasize how much having a flourishing medicinal program helps when a state flips, especially when the government is accommodative in getting the infrastructure set up to allow for sales on day one. I mean, just compare what we're seeing with Arizona here versus New York, where even though it's legal, not one recreational sale has been made yet. So with this being Arizona's very first year reporting combined recreational and medicinal sales, and comparing those figures to last year's medicinal only numbers, well, of course in percent terms, that's going to look really good, whereas you're not doing that with the other two markets. So that's why I say not quite apples to apples, but those other states posting slower growth doesn't really answer the question of why Arizona's market is doing so well. There is other data in this report about the Arizona market that I'm going to skip here because it's not pertinent to the discussion, but feel free to check it out later if you wish. So the second factor here is prices, specifically lower prices resulting from a downward pressure in prices. This is an ongoing theme I bring up every time we've taken a look at a state's monthly sales figures. As you can see here, they break out products into a few different categories: concentrates, flower, pre-roll, vape pens, and give us the average item price of each in the month of September. I really wish they would have contextualized this in terms of grams as well. I'm finding myself trying to guess at that as I look at these prices. So average selling price of flower coming in here right around $29. That's the light blue bar, which corresponds to the scale on the left, and I assume that's for 1 gram. Concentrates around $26, vape pens around $32, assuming those are both for half, and I can't even tell you what this $9 pre-roll number is for. And then they also plot change in average item price from the beginning of this year, and that's denoted by these blue dots, and the scale on the right goes with it. As you can see, flower prices falling a whopping 21% during the course of the year, concentrates pre-rolls falling a bit, around 1 and 3%, and vape pens, which I know to be increasingly popular products, were the only category that saw an increase in price by around 7%. So something like 21% fall in flower prices. I mean, $29 for what I assume is a gram is still very expensive, but a change in price like that should be positive for conversion. That is, conversion of illicit sales to legal sales. Compare that with the Illinois market, which we looked at when they reported September numbers, and really only saw a small unit price decrease. The other part of the pricing discussion, aside from how quickly prices are coming down, is the price itself. So if we look at price points for one item across the 3 states in this chart, you see the price of vape pens, which is Arizona's most expensive product, as we saw in the last chart. This time the light blue dots, which are the average item price, go with the right axis, and the blue bars are total units sold for the the month of September and go with the left axis. And it's pretty clear the relationship between price and sales in units here. This is a point I keep harping on, and I know it hasn't been evident in some of the same state data we've looked at in the past, but this is a clear relationship here. As prices come down, you sell more units to a wider base of consumers, and though your margins in percent terms might be lower than before, you're better off from the increased revenue that comes with selling to a wider consumer base. And if you didn't believe me before, I hope you do now. The data here on the underlying factors and the result, Arizona's sales, should be really convincing evidence. And that's where Headset ends their reporting. They're just reporting the raw data, and all of this color is my opinions. Just want to be clear that I'm the source, and I don't want to incorrectly portray this like this is coming from Headset. Anyway, there is one more data point I want to look at that Headset doesn't report on, but I think is vital, and that is taxes. Taxes between states vary widely, and the average item price we just looked at doesn't give us the total price the consumer is paying at the register, and that really makes a big difference. If we look at the Arizona Department of Revenue website, they list tax collections as well as sales, and I just threw this into a spreadsheet to get an average tax rate that comes in at 8.4%, and compare that to the tax rates in Illinois and Michigan. You can see how comically different these are, and then we can see the true price of this vape item Headset listed, and the differences in sales becomes even clearer. So I can tell you in Illinois, in people's minds, this isn't a $45 item, it's a $60 item. So relative to the illicit market, you take something that's already priced unattractively and then slap an obscene tax on it, that really makes a big difference, and it destroys any hope of converting those illicit sales. A couple of quick government policy updates that I wasn't able to get on your radar during Monday's episode because I had some technical difficulties. You may have seen news regarding Nevada's Cannabis Advisory Commission holding a meeting yesterday where they discussed a number of things. Nothing really material came out of that meeting. It was 3 hours, and admittedly I didn't listen to the whole thing because it was just a discussion on recommendations amongst the members. They didn't vote on anything or make changes to the program. As the meeting agenda says here, it was recommendations for possible action in the future. So the news is no news. Nevada isn't all that large of a market despite Las Vegas. By GDP, they rank 29th among the states. Their market is recreational and pulled in $786 million in sales last year. That's around 64% of my estimation of the potential total market of $1.2 billion. And that 64% market penetration is pretty good compared to most states. From what I know, prices have been coming down in the last few years. They're not street prices, but I'm not balking at them. Their tax rate on products isn't egregious either, around 15%, so I actually think they're in pretty good shape. At least those are the numbers I've seen online. If there are any Nevada locals listening, drop some info below in the comments section. I'd love to know how accurate that is and get a first-hand account of the market. The other piece of government policy news is that New York's control board is meeting tomorrow. By the agenda, it looks like they're still discussing the medicinal market, so pretty disappointing that we're still not seeing progress on the recreational market. Another quick thing, there was this interview I wanted to bring to your attention by MJ Daily of CURLF CEO Joe Byrne. This was given ahead of MJ BizCon and is kind of high level, and honestly the answers are generic, but just like the Kim Rivers AP interview I talked about the other day, I just wanted to put it on your radar in case you are interested. If you're a newer CURLF investor, I encourage you to check it out, but after a while these questions kind of get repetitive. So I guess you can't really blame the interviewee for giving stale answers, but yeah, if there was anything to remark on, I would be doing that now instead of saying whatever I'm saying here. Alright, that is all for today. Thank you so much for listening. If you want to interact with me, find me on Twitter. My handle is @MJMarkets. I also have a Patreon page set up. That's patreon.com/MaryJaneMarkets. Thank you for continuing to share my videos out. I saw a pretty nice bump in subscribers the last couple of days, so I'm assuming somebody shared out Monday's episode somewhere, so thank you so much for that, and welcome to all of my new viewers. Please continue to do that. Word of mouth is really the only way I have of growing the channel. Again, thank you.